Sunday, December 30th, 2018, Maneco 64, home of alternative economics and contrarian views. This afternoon, I want to talk about gold during a financial crisis. A lot of times I get comments and questions from viewers saying, what's going to happen to the price of gold if there is a crisis. Jim Rogers is saying that gold's going to drop below 1,000 if you have a financial crisis. And I think that kind of thinking puts a lot of people off from having physical gold. And I think not Bill Rogers, but Jim Rogers thinks more of gold as a trading instrument. Maybe he does hold some physical gold. I don't know. I personally view it mainly as a currency protection outside the system. Best track record in the last few thousand years. There's no doubt about that. We know that all fiat currencies usually, well, not usually, 100% of the time revert to their intrinsic value, which is zero. As Voltaire said a few hundred years ago. So unless you're trading, I think what one needs to do if one is looking to protect themselves, their wealth, hard-earned savings through precious metals, is to buy as much as you can, as often as you can. Dollar cost averaging, so to speak. And today I'd like to look at the last big financial crisis, of course, 07, 08. And we could say that the stock markets bottomed beginning of 09, around March 09. But the bulk of the crisis happened in 07 and 08. And we have to look at the whole crisis. Most people think of the financial crisis, they think of Lehman in September when Lehman collapsed, but it started much earlier than that. And I think that's what people need to keep in mind when looking how gold did. The other thing I like to say about gold, a lot of people look at gold, the majority of people everywhere around the world look at the dollar price of gold. Why is that? Well, because the dollar has been the reserve currency since World War II. It used to be as good as gold, supposedly up until 1971. So the price of gold in dollars is very important. But I think people, wherever they may be, they need to also keep in mind of the price of gold in their local currency. And that's why I'm going to go through today at the financial crisis timeline, and then I'm going to go through the price of gold during that crisis and after the crisis and today in several different currencies. All the so-called major hard currencies. That, of course, is a great fallacy that they're hard currencies, but that's a subject for another video. So yeah, as I said, most people think the crisis of 08, well, was Lehman, but no, it started earlier. And if you read here from Wikipedia, it says financial crisis of 07-08. The financial crisis of 07-08, also known as the global financial crisis and the 2008 financial crisis. You see, that's why most people don't look at 07, but it actually began in 2007. And if you look at the timeline here, 2007, February 20th, the Dow Jones Industrial Average hit its peak level of 12,786. Existing home sales also peaked this month and began to decline. April 2007, New Century, an American REIT specializing in subprime mortgages, filed for Chapter 11 bankruptcy protection. This propagated the subprime crisis through securitization to banks around the world. August 9th, 2007, BNP Paribas, a French investment bank, blocked withdrawals from two of its hedge funds, a clear sign that banks were refusing to do business with each other. August 07. So you can see that it started pretty much in the beginning of 07. I think a lot of people, you don't realize when a crisis started. You only really the majority of people only realize there is a crisis when it's probably almost at the end. Especially Ben Bernanke, who said in '07, I think, I'm not sure if it was in May or sometime in '07, he said that the subprime mortgage crisis was contained and the economy was doing great, right? But I think when Lehman collapsed, then he realized, like most everyone else, if the chairman of the Federal Reserve doesn't realize it until it's already happened, you can imagine that most people won't. So that's what I want to keep people in mind, that we actually started in '07. Another major, I think, landmark for the crisis was March, when was it? March 2008, when Bear Stearns, March 17th, Bear Stearns collapsed. And they had to be taken over by JP Morgan. The Federal Reserve had to back the deal. So JP Morgan really had help from the Federal Reserve. And that was, like, I think, when most people realized, wow, this is getting bad. But I'm sure a lot of them thought, oh, it's going to be fine now. JP Morgan took over it, but no, it kept going, right? And then you had the collapse of Lehman, September 15th. And then finally in March 2009, the Dow hit its lowest level, 6,443.27. That was March 6th. So I want you all, so as you can see, we started like early February 2007 till March 2009. So the crisis really evolved over almost, over 2 years, so to speak. So now, with that, I want to look at the price of gold. And I'll start with the dollar. These charts are the same. The dollar one starts from '04, but you can see here in the beginning of '07, gold was below 700. It was around 620, 650. It started the year. And then it kept going up all of '07, all of '08. All of '07, I'm sorry, and then it topped in March of 2008 at 1,031. I think that was the day Bear Stearns collapsed, and then it topped there, and then it came down, and then it had that big drop below 700 during the Lehman collapse. I think the bottom was around 680, but it was above where it was in the beginning of 2007, beginning of the crisis. And then if we go further, in March, when the stock market bottomed, gold was already back above 900. So what I'm trying to say here is, all throughout the crisis, if you had gold before the crisis started, you'd be doing quite well in spite of that sharp drop there from, up from 1,000 to around 680. Let's say that you got out of gold, beginning of '07 around 650, or 700, a bit later in '07, because you thought there was going to be a crisis, right? And then gold kept going up to 1,000, and then it dropped to just below 700, just where you had sold prior to the crisis starting. And then you weren't too sure, you didn't get back in, and then by March it was at 900, and then you said, oh, I need to get back in, so you missed the $200. So all I'm trying to say is, trying to be cute, it doesn't help, especially if you're accumulating gold as a protection. Well, and look, after the crisis, I mean, we went up to 1900. We have dropped, of course, but we're still at 1280. From when the crisis started, gold was around just above 600, and now we're at 1280. So gold has done its job in US dollars. So now let's go and look at euro, the second major currency. See where it was beginning of '07. Well, it was around 500 euros. So you can see that all throughout '07, it went up. Bernanke still thought there was no crisis, but I think the market did. And we topped above 600 in March. We dipped to around 530, you know, when the price of dollar in gold dropped to around 680. But again, you know, you wouldn't, if you gotten out, you know, at 640 to try to buy it back. And then already in the beginning of '09, that price had zoomed up to almost 800. And look where we're now, you know, 1120 in euros. And it started the crisis just around 500. So another, you know, gold performing well there again. Now, an interesting one is the price of gold in the Japanese yen. And remember that the Japanese yen is a carry trade currency, and that means when there's the yen is used to people, speculators, investors borrow the yen, so they sell the yen to speculate. When there's a crisis, they do the opposite. They buy back the yen because they're losing money with their riskier assets. And usually the yen goes up quite drastically during crisis. So let's look at beginning of '07. The yen was, the price of gold in yen was around 76, 75,000. Throughout '07, it went up to like 100, almost 100,000. Yeah, topped around there in March 2008. And then during the, you know, the heights of the crisis, Lehman crisis, we did drop quite sharply to around 64,000. And that's because of, you know, people were unwinding their short yen positions. But let's say if you had sold at 100,000 and waited, you know, to buy it back. But look how quickly, you know, the rebound was from the end of '08 to, you know, the end of 2009. We were back up, you know, above 100,000. So, and now look where we are, 141,000. People who are using the precious metals to protect themselves, I wouldn't worry about a financial crisis. And I'll come back to what I think might happen to the price of gold if we are in a financial crisis in a minute. So now let's look at the pound price of gold, sterling. So we started '07 around 340 pounds. We were up around almost 500 at the Bear Stearns collapse. We corrected back below just above 400, and by you know, by the bottom of the end of the crisis in '09, March '09, the price of gold in pounds was already like at 650. So you would have made a big mistake if you gotten out of gold at the end of '07, just before, you know, the crisis really kicked off. If you were, you know, domiciled in the UK. And look where we're now, back, you know, above 1,000. So just as the crisis started, gold was just above 300, and we're now at 1,000. I mean, there's no argument there, in my opinion. All right, so let's look at Canadian dollars. A lot of my viewers are from Canada. Beginning of '07, it was at around $750, the price of gold. And by the time the crisis subsided in March of '09, the price of gold was already at $12.50 in Canadian dollars. Now we are almost at all-time highs here at almost $17.50. Last but not least, Aussie dollar. So we started '07, we were around 800, 825. By March 2009, I mean, we'd been up to already 1500. So for Australians, it would have been a really bad idea to wait for gold to drop during the crisis, wouldn't it? And now we're actually the Aussie dollar price of gold is closed at an all-time high at 1820 on Friday. You can see there, it's not the highest level because we've seen highest levels, but it's the highest closing level, 1820. What do I think is going to happen to the price of gold in the next crisis? Or are we already in a crisis? I think one could argue that we are. The fact that stock markets did so badly, the worst month of December since the Great Depression, could be, you know, construed as meaning that we are in a crisis already. When did that crisis start? It will be easier in hindsight to see where the crisis started, but sometime, you know, after the first half of 2018, I would say. We know gold bottomed in August at 1160. So what I'm trying to say here, if you're going to wait for gold to drop below 1,000 during the next crisis, I don't think, well, you're going to be waiting a long time, in my opinion, because we could actually see gold keep going up during, you know, the crisis. And then when you have like a, how can I say, the when the crisis really is like hits the fan like it did with the Lehman collapse, then we could maybe see some kind of correction in the gold price. But I would say it would be a lot higher from where we are now. It could be, you know, from 1,500 or 1,600 or even more down to who knows where it's going to be. But if it does dip like that, I think it's going to be quite difficult to get out, especially physical gold. I remember during that low in 08 when gold dropped from 1,000 to 680. If you went to a dealer in London or anywhere, I was reading, you couldn't get gold for the spot price. The premia were like 10, 15, 20%. So yes, I personally am not worried of if there's a crisis. I'm not worried for the price of gold. I think the most important thing to do is to keep a hold of your physical gold and not worry about the price fluctuations as you saw through all those charts in all those different currencies. So if you enjoyed this video, please make sure you give me a thumbs up. Share it far and wide as well. If you haven't subscribed to the channel yet, make sure you do. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great rest of the weekend, a happy new year. I will be doing a video tomorrow because the markets are open, and I'll talk to you later. Take care. Bye.